Let's talk about the consumption space. Sanjeev Asthana, who's the CEO of Patanjali Foods, joins us now. And we'll be obviously focusing on the consumer centimeter, the consumption centimeter. Main points to discuss: the impact of GST reduction on their business, the sentiment ahead of the festive season, and more importantly, outlook on raw material prices and the company's plans to scale up their home and personal care business. Thanks a lot, Mr. Asthana, for joining in. For a business like yours, where you do have the entire portfolio, right from edible oil to home and personal care to toothpastes, and also at the same time you have food, etc. If you could give us on a blended basis, what's the reduction in your GST? Because from what we look at your portfolio, it seems like your entire portfolio has now come down from 5%, some from 12%, some from 18%. So if you could give us a sense on what the overall blended reduction of this is, and what is the likely incremental volume expected from these lower rates?
So two parts to your question. One, that reduction, what has happened is edible oils has largely been untouched. It used to be at 5%, so pretty much it remains at 5%. On most of the HPC products, it used to be 18%, barring a few, which were at 12%. So they have got down to 5% now. A lot of food products, which were earlier at 18%, they are at 5%, and some were in the category of 12%, which has gone to 5%. So on a portfolio basis, our estimation is that close to about 10,000 crores would move towards a 5% bracket, and about 2/3 of the business will pretty much remain at 5%, which used to be. In terms of the growth, what we are estimating is that sudden decrease in the GST would not mean an uptick in the consumption straight up. But two things are supportive. One is that, the festive season is around the corner. So we do estimate that, a 13% reduction from where it used to be is pretty substantial cut, which should spur the consumption. And likewise, on the food side, as the festive season kicks in, we believe that over the next couple of months, we should see an uptick of 300 to 400 basis points. It could be higher as well. But two parts which combine. One is the income tax relief, which was announced earlier, which means more money in the pockets of the middle classes. And the reduction in the cost, I think, should be positive to the consumer sentiment. And company like us, I think we should have minimum 300 basis to 400 basis points of uptick in the sales in the coming months. But that on an immediate basis, I don't estimate will happen in next 1 month. But in a couple of months down the line, it should settle down and we should reach an equilibrium.
So, Mr. Asthana, from what you're saying, let's talk FY26 entirely, because this will take some couple of months for all the cuts to be passed on through the system, the new MRP packs. What you're saying is at least 300 basis points improvement in total volumes for this year, or are you saying sales?
Both volume and the revenue itself. So because we have passed on the cut to the consumers and the revenues are captured net of taxes. So irrespective, the benefit when I'm talking of 300 to 400 basis points is basically on the revenue side, on the volume growth.
How do you ensure passage of these lower costs? What proportion of your sales comes from these price packs, which is the 5, 10, 15, etc.? And by when will new MRP stocks hit the market earliest?
So 22nd September is the date. So we've already reduced prices on most of our products. The consumer, the distributor stocks, we are tending to taper off to get ready for the 22nd September. And in terms of 5 and 10 rupees packs, that is a more complex planning which has to go in. So that the benefit is being passed on through the weight increase measures. So for example, on a Nutrela, the soya chunks and soya nuggets business, we are increasing the grammage. Likewise, on the biscuit categories, which was at a very low price point, it's not possible to cut down the prices. So there we are passing on the benefit through increased grammage. And all that work is going on. So we're pretty confident by 22nd of September, we should be pretty much in place to pass on the benefit to the consumers. And hopefully that should lead to an uptick in consumer sentiment and our consumption of our products.
Mr. Asthana, just a side note on this, and it's a bit of an operational issue, but just trying to understand. So for the existing inventory where the new MRP printed packs are not yet out, I think the government said that the companies have to advertise adequately and pass on that information to their customers. So does that mean, at least in the interim, maybe just in the month of September or early October, will ad spends have to be higher? What is your interpretation of the fine print of the rules as they've come through for your existing inventory with the old MRP?
No, so absolutely. I think government, is very keen that the companies have to come good on the commitment to decrease the prices. They also want transparency. They also want, commitment from the corporates that everything, which has been reduced for consumers is naturally passed on. And for that, communication has to be done. But I don't believe the communication costs are going to be disproportionately high. It's a fairly marginal cost for most of the large consumer companies. We have already started advertising and communicating to the distributors directly, and also through the social media channels as well as the national mainstream media that we have already done the communication bit. So I think consumers are pretty much aware. Distributors have been sensitized. That exercise, the date was announced. I think within 3 days of that we started communicating, and so I don't believe it is going to be of any load in terms of the substantial cost increase on the communication bit.
Take that point. The only issue that a lot of your peers were highlighting is that if we pass it to the trade, to ensure that trade passes it on to the consumer will be very difficult to track. That's point number one. And secondly, for price point packs as well, the existing inventory that there is, you can't immediately exhaust that because the new inventory that comes with, say, one more biscuit than the 5 or 6 that you give in that pack. What do you do with the others? So, be that as it may, obviously near-term transitions, but long-term it is a positive. Let's talk about your edible oil margins, likely margins in the second half, because we've seen reduction from the highs in terms of prices. So what kind of high-cost inventory are you sitting on, and how low are the margins likely to go before they start to improve, and by when do they start improving?
So there was a duty impact that we had when the government reduced the duties, and we were sitting on high cost, higher duty paid stocks with us. That is past now. I think this quarter itself we have seen substantial increase. So you would see that the second quarter FY26 we should have substantial improvement, and perhaps we'll get back between 2 and 4% of EBITDA margin that we project. Pretty much we should be in that category this quarter.
So you mentioned that a lot of your home and personal care products were earlier in 12 and 18, and now they'll move to 5. So there should be some benefit, coming in over there. So what are your estimates? First quarter, I think you were at about 640 crores roughly in terms of revenue. Your margin in home and personal care was about 17.7%. What should we expect from this business? Again, I'm talking full year, FY26.
So what we had, Surabhi, what we had projected was that we will do 15% uptick in the overall revenue growth for HPC businesses, which was to come in 12 to 18 months. This year, the target is that, we will certainly be south of that target that we had, because I think next year will be one full year when we'll get the fullest benefit. But we should see definitely a growth rate of 7 to 10% this year. I'm estimating that HPC businesses are pretty robust right now. The integration process, while it is continuing, but it is getting into more completion mode right now. So I think quarter number 3 and 4, we should see substantial uptick. But on a FY26 basis, compared to last year, when we acquired the businesses, we should have about 5 to 7% growth rate in the business. And next year onwards, we should be on a full 15% growth year on year.
So that means that, this 3,200 crore target that you had for this year now comes down to about 2,600 crores. Would that be a fair assumption?
No. We had a target clear cut of 3,100 crores. We should be pretty close to that number, between 28 to 2,900 crores for the HPC business overall for this year.
And margins at 18% sustain?
Yeah.
All right. So 3,200 crores turns into 2,900 crores with 18% margins. And the foods business, staples, they continue to be under a wee bit of pressure as well. In the first quarter, obviously, there was a sharp reduction in margins. Do you believe they go back to that, 7, 8, 9% sort of mark? Are you expecting any time soon?
So there was only one particular segment in that business which had a stress, which impacted the overall profitability. The consumer staples, that we had, which is basically rice and atta and lentils, etc., and sugar and salt. So they were under stress. There was a lot of active inflation management that was carried from the policy side. So that has had an impact. And second was the butter prices on ghee. There was a huge uptick in the prices of raw material, which had an impact. We could not pass on the full prices to the consumers on the cow ghee, and both are pretty large businesses for us. So this we are seeing some improvement there, and I'm confident that between 8 and 10% margin that we have projected for the year, we should be pretty much there for the full year.
All right. You've spoken about all your segments. In the oil business, you said you should get to about 3 to 4% margin sooner rather than later. In terms of volumes, what is your projection here? Because, the Prime Minister, when he speaks from the ramparts of the Red Fort, says that everyone should reduce their oil consumption. The next fight really is on obesity, etc. It may have some sort of impact, right? Because when consumers become a lot more conscious, could there be a bit of a volume slowdown here?
So we are pretty sure that, whether it was Prime Minister's exhortation or otherwise, there was a reduction in the edible oil imports, for the full year by the country itself. So there was some sort of downtick what we saw on the imports, and that also reduced the overall revenue itself in the terms of volume term. But I think this year we are expecting a pretty normal year, and we should see between 2 and 3% increase in the country's volumes, and which should be pretty much reflective of the volumes that we will do as well.
Okay. Mr. Asthana, as we wind up, I have a slightly bigger business/philosophical question for you. I mean, you've mentioned that for you, your business will see better revenue to the extent of 300 to 400 basis points this year. But largely, there are those who argue that when you talk FMCG, those items anyway will be consumed. It's just that there'll be more savings now because instead of paying 12% tax or 18%, now it'll be taxed at 5%. So the incremental benefits of GST, do they really go to staples, or do they actually go to other, discretionary consumer companies, whether it's, ACs or TVs or anything else for that matter? How much do you think that the FMCG sector, your company included, will benefit on a durable basis, if at all?
Which is what I said as well earlier to your question, that I'm not seeing an immediate uptick. So people would not start, for example, using more skin cream or more dental products or otherwise on an immediate basis. It is on an overall economic sentiment for consumer companies, especially on, consumer durables will certainly tend to benefit more, because as you do see that multiple number of consumers have postponed their purchases to, do it after the price reduction is fully passed on to the consumers. But my sense is that overall, once there is more income in the pockets, once there is saving, there should be some uptick. And that's why I've said it's not going to be entirely, large numbers will start moving in. But yes, certainly overall, what we saw very distinct slowdown in the urban consumption, and for several quarters. And we saw some, increase in the consumption in the rural areas. But broadly, my sense is that any kind of saving of this kind, 30% is very substantive savings in terms of cost reduction what the consumers will have, should increase to sales, the demand for the latent demand, which is there already in the with the consumers. I think it should certainly benefit. We are estimating it should be about 400 basis points, and which is pretty much a normal expectation that consumers would tend to consume more, perhaps, be incentivized to experiment more with the newer product launches that might be done, or increase their basic consumption, which we saw distinct slowdown prior to, in last almost, 5-6 quarters, we have seen that the urban demand was slowing down. I think that should start to pick up.
Take that point, Mr. Asthana. Thank you so much for joining in and giving us an outlook on that. To your point, Surbhi, we had Mr. Sanjeev Asthana's namesake, Sanjeev Mehta, join in on Friday. He said that instead of looking at what individual companies benefit, etc., just look at what the government has foregone in terms of revenue. That will be a little over 40,000 crores. What his assumption is that a little more than that 40,000 crores will come back in the form of consumption, because that would be at an aggregate level. So if you look at your consumption component in the GDP, that should increase by upwards of 40,000. Where it goes, how it goes is something that, we'll know. And the other part is that
beauty salons, you don't know whether
and even in the staples, the volumes will actually increase optically in the staples for the simple reason because nearly 30 to 40% of our sales value comes in from price point packs, which is 5 rupees, 10 rupees or 15 rupees. And when you're buying a 5 rupee biscuit, you are consuming that entire pack. Or when you're buying a 1 rupee, 2 rupee shampoo sachet, you are consuming that entire pack in one go. Just because there is, one extra biscuit or a few grams more of shampoo does not mean that you will save up on that. So incrementally, there would be volume growth coming in on those price point packs itself. But